All right. What is up, traders? What's up, tycoons? Super excited for today's video. We're going to be talking about natural gas. We're going to do a complete technical analysis breakdown of the natural gas spot price, the natural gas futures, which are very important if you're trying to trade things like UNG, BOIL, as well as cold. Okay. Those are going to be moving off of the price of the futures, and you can see a good relationship between how the price of the futures trade, how the price of spot price trades, and also how some of those ETFs trade. Commodity-based ETFs, commodities futures-based ETFs, suffer from a lot of things like decay, and whether that's volatility decay or contract roll decay. There's many different factors. So these are all things that you want to consider whenever trying to make any investments into natural gas or trades. Now, the content provided on this channel is for informational and educational purposes only, and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclosure. So the first thing that we're going to start off taking a look here is going to be our natural gas spot price. Now we're going to zoom out in just a second, but I do want to show you guys that, we've basically just gone sideways really for the past month or so. Now, you could say that this is a nice bull flag forming, right, with our flagpole and then our flag developing here at the moment. We're holding above 2.43 and holding below 2.79, really just consolidating in this range, looking for the next move, whether it's a breakout to the upside or a breakdown to the downside. We should know very soon. Now, one thing worth noting is we have a little bit of a negative divergence forming. See how price action is just consolidating here. And if we were to just draw some simple trend lines, you can see that we are starting to squeeze here. Okay, we've got this triangle pattern forming. But when we take a look at our RSI, we're starting to see that it's actually in a bearish channel right here. Okay, so price action is squeezing going sideways, but we're seeing a slight bearish divergence on the price or on the relative strength index. Okay, remember that's what your RSI is. It's going to measure the relative strength of whatever it is you're looking at its given price. And what I like to do is I like to do a little bit of divergence trading in particular. Okay, so what we're going to do is just simply highlight a few times where you can use a leading indicator such as the RSI, and then a lagging indicator such as the MACD to really get a good sense of what price action may potentially do in the future. So to give you guys some examples of this, what we're going to do is break down these strategies and how you guys can use them potentially to help you out when trading in the future. So I have here highlighted, we're making these lower lows, right? We have a low here and we have a lower low. Now let's go down here to the exact same area on our RSI, and we see we have a low and then a higher low. So we're actually building bullish divergence, building relative strength in the price of the natural gas spot price chart. And this would be known as a bullish divergence, right? And being that the RSI is a leading indicator, it's going to tell you what potentially could come in the future, right? And your MACD is going to be a lagging indicator. So that's going to tell you something after it's already happened. So what we're looking for is we're looking to see, okay, well, we do potentially have a chance for some bullish divergence to play out and result in some positive price action. Let's see what our MACD is going to do. And after the bullish divergence, you can see that the white line here crosses above this red line, and that would be your confirmation of a MACD buy signal or entry signal, and you see it gets followed by that positive movement to the upside. Now, the exact opposite of that is going to be a bearish divergence where you have higher highs. So we're making a high, higher high, higher highs. Meanwhile, the RSI at those same exact moments is making a high, a lower high, a lower high, and a lower high yet again. So this time we have a bearish divergence on our leading indicator, telling us that we could be potentially due for some bearish activity in the price. And sure enough, we see the white line here cross below the red line. That would be a MACD exit signal. So we get our leading indicator here telling us we could be due for some bearish movement. We have our lagging indicator telling us after what's already happened. And you see price action follows accordingly. So, there's going to be times in this video where I reference bullish divergence and bearish divergence. And that's a quick little walkthrough for you guys so that you can truly understand. Now, remember, when you look at the spot price, we've really just consolidated and traded sideways. We haven't really gone anywhere. And you can see that this is a prior resistance area, prior consolidation area back in February and March of the year. When we take a look at our natural gas futures, which is what we're going to do next here, right? And we'll start off on a larger time frame, and then we'll zoom in to a smaller one. So we're here on the monthly chart, just so you can get a sense of a little bit more of the macro view of things when it comes to natural gas and the natural gas futures. We have this very strong demand zone, which you'll see when we zoom in on the 4-hour chart. We've had a very, very strong demand. Now, a lot of people like to be contrarians, okay? And so right now, there's a very bearish tone on natural gas, right? It's no secret and it's very evident in the price action. And a lot of people are betting on a bearish winter. So oftentimes, traders like to be contrarians. And there's a lot of contrarian people out there betting that natural gas will have a strong winter and we will see strong price increase. But you just have to be aware of the risks. Okay. There's lots of risk associated with these things. And there's a reason that they call natural gas the widowmaker. Okay. I do lots of personal coaching sessions, and I've had coaching sessions with people down, 5 figures, 6 figures, even 7 figures, trading things like oil and not really just understanding or having a true game plan heading into things. And then things spiral out of control, and you end up in a place where, you're very frustrated, and it's a hole that's very hard to dig yourself out of. So, from a macro perspective, we still have this very strong demand zone, and really we've just been doing nothing but consolidating. And it's not uncommon for us to do this, right? You can see here, all right, we zigzagged in between these supply and demand zones here, ultimately before getting the strong push up, right? And you see that's happened over here as well. We consolidated for years, right? For about 2.5 years in between these supply and demand zones. Right. So, when you take a look at things, all this is really is we've just been having a lot of healthy consolidation in here in between these levels, and haven't really made any major moves since the beginning of the year in January, when natural gas had its huge plunge down in price. We'll go ahead and zoom into the 4-hour chart now, just so you guys can see what's going on more of a day-to-day basis, right? It's very good to do multiple time frame analysis. But this is what I meant earlier, right? So you see in this demand zone back in February, as soon as we came down into this demand zone, right? We'll zoom in even more, just so you guys can really see. But you see, as soon as we come down into it, we form a reversal candlestick and get a large engulfing candlestick over here. We come very close to that demand zone, and then we shoot right back up. Over here, we come into that demand zone, form a nice hammer, start going back up, and we haven't retested this demand zone since April of 2023. So it's been months and months, right? And there's been many chart patterns. If you guys aren't subscribed to the channel, make sure to subscribe to the channel, okay? Because I'm pointing out whatever patterns that I see, and any trading opportunities that I see in the videos. We had a head and shoulders right here at this specific point in time. That was a very nice short-term trade opportunity, right? And then it actually ended up leading into an inverse head and shoulders, right? With the left shoulder forming here, the head, the right shoulder. And I pointed out our neckline here. And once we broke through there, we had a strong push up into our overhead demand zone, or I'm sorry, supply zone. And we've really been consolidating ever since that moment. And you can see we do have a little bit of what looks like to me controlled selling, right? We have some controlled selling here, and we're really just, grinding back down after pushing up very aggressively, right? Which is what you want to see, right? You want to see some absorption of that large move up, and you want to see some consolidation here. You don't want to see capitulation in a complete reversal, right? We were watching for potential capitulation with this rising wedge that we had here, and we were looking to see if we were going to get a move all the way back to the downside, and that's not what we got actually, right? What we can see is we actually got some very nice controlled selling here. Looks a little bit like a selling algorithm. And, we're really just absorbing lots of the price action. Most recently, what I'm looking at is we have a nice double bottom forming here, right? So here's a bottom, here's another bottom right here. Okay, if we are able to break through our neckline, which is essentially going to be this level here, 228.1, and this is on the MCX. Okay, this is the MCX natural gas futures. This is just what I like to use on my trading view. And if we can break through there, then that's going to be the neckline of our double bottom. And that's when we would look for a strong push up to retest some of our previous highs over here, which would be about 246. 246.3, 246, 247 area on the MCX futures is what I'm going to be looking for if we can get a strong move up. Now, if we break through this 203.7 level here, then most likely that's when we're going to come and revisit some of the prior lows that we had in June of 2023. So just basically a couple months ago. All right, so that's all the major levels that I'm paying attention to right here on the futures. If we go back to our daily time frame, we'll actually take a look at BOIL now. I know BOIL is very popular with a lot of people. And we'll go ahead and, just go over some of the key levels. Now, we've pretty much broken the original structure that I was looking for. So right now, we just have our major levels on here, okay? So we've got 57.28 is our big support level. And I've mentioned that pretty much anytime what we're looking for if you're bearish, right? And if you're wondering if things are about to go bearish, all right, for BOIL, for me, that level is 57.28. If we break that level and flip it to resistance from support, then I do think that BOIL is going to come down and retest some of the previous lows in the 50s or maybe even 45. But you can see that each time we've dipped down below it, all right, 2 times there, 2 times here, you can see that buyers have quickly stepped in and pushed the price up higher. Now, we take a look at that natural gas spot price chart, and it was much more sideways than this, right? Much more sideways consolidation versus BOIL has a much stronger downtrend here on the daily time frame. And the reason being for that is due to some of those decay factors, right? If you're not familiar with some of the decay factors associated with BOIL and some of the myths about it, because there are myths that you can't make money using these type of leveraged ETFs, all right? But you can, it just has to be the right market conditions. I've got a very, very good video going into great detail, really just, covering all of those myths and dangers about the decay associated with things like UNG and BOIL. Just type in ZachlyTrades, BOIL, decay, it'll pop right up, and it's a great video. Now, being that we've been able to hold above 57.28, $61 is that next major resistance level now, and 64.73 is going to be our next major resistance level now. If we can get above there, we're looking to essentially take out this little short trend line right here and get a move up to about $89.15. Now, this isn't going to happen overnight, okay? We're not expecting that, but that's what we would be looking for. If we can break through these levels here and get a breakout retest, we would be looking for a move up to about 89.15 on BOIL. So that's what I'm watching out. But we're keeping in mind, if we break below 57.28 and flip that to resistance from support, there's a strong chance we're going to retest the 50s or maybe even $40. Right, so that's pretty much the main thing I'm looking at on BOIL. There's been many different trading opportunities based off of bullish divergence. We talked about bullish divergence earlier in the beginning of the video, and you can see that each time BOIL has come down and made a low, and then a lower low, and then a lower low, a lower low, lower low. What's happened is we've been met with higher lows here on the RSI each time. And each time that we touch this bullish divergence trend line, even here recently, you can see we touched that bullish divergence trend line. We have a nice little bounce up. So, there are ways to make money with these things, even if it's trading sideways short term, if you're looking for short-term trade opportunities. These type of divergences could be something to look out, to basically help you on your journey. Now, being that we've tested this bullish divergence trend line so many times, we need to keep in mind that eventually trend lines break, right? They're valid until they're broken, but we've tested this one so many times now. If we do end up breaking through this this initial bullish divergence trend line, there's a very strong chance that we could see a strong downside push in something like BOIL. Let's go ahead and take a look at cold, and then we'll take a look at UNG next. Cold, we really haven't been able to get below the bearish level, right? Which is about $60.36. About $60.36. If we can flip this to resistance from support, okay, that's when we would be looking for the downside move in cold. Okay, but until we are able to flip that to resistance, there is the chance that cold could continue to go higher. Now here we also do have a double top forming. Okay, if we take a look, right, we have basically an M pattern is what you would be looking for, and we need to break our neckline of this double top. All right. It's not a double top until we confirm the breakdown of that neckline. And if we do, that would give us the move down that we're looking for, which is going to target about 40 up to about 48 on cold. Of course, cold going down would be bullish for something like BOIL. So that's definitely something you want to pay attention to. Same thing with BOIL. This one essentially had a bearish divergence trend line that it had been building for a long time. You see we're creating higher highs here, and then we are creating lower highs on our RSI trend line. We just came up here recently when we put in that double top and rejected that trend line. But the more times you test the level, the weaker it gets. So we need to be cautious of cold breaking out here above that trend line. But ultimately, if we can flip 60.36 to resistance from support and really actually stay below this level, you see we've dipped below it, but it hasn't turned to resistance, right? We've been able to climb back above each time that we've come down below. It hasn't really stopped the price action at all and hasn't been a strong level. Once we can do that, then that's when we have more downside pressure coming in for cold. 66.48 is a strong resistance level as well right now. That's where we put in our double top. And above there, we have 72.60. For now, these are all of the major levels that I'm looking at. We pretty much invalidated this bear flag structure that we had right here, or this bear pennant. So we'll go ahead and get rid of this drawing now because it's pretty much been invalidated. If we wanted to, we could redraw it as such, right? And we'll throw some trend lines in here and just draw it a little bit more of a traditional type of flag pattern way, something like this. All right. And so we do still have the potential for this to be a bear flag, but it broke the initial structure that we were looking at and that we were tracking on the stock. So we're going to see, how these things develop. When we take a look at UNG, I have the areas highlighted here, but, just going back to that bullish divergence, there's many different opportunities there were to really trade something like UNG right here. The initial bullish divergence with these lower lows running into higher lows that led to a 40% rally, right? And then once you're in some profit on these plays, you can set a stop loss, a trailing stop loss, take profit anywhere along the way. Then the next time we came down and created lower lows, but hit our bullish divergence trend line, 16.89% rally over here, 26.8% rally, creating lower lows again, 33% rally. And as I mentioned with BOIL, we pretty much broke the structure that we were looking for. We were looking for a 5-way bullish structure to the upside to 821. But, we've pretty much broken that structure now. So we'll go ahead and get rid of this drawing here too. And, essentially just look to see, can we continue to hold 667 as support on UNG? And will we finally be able to break out above 715? If we can break out above 715, then we would look for a break of this trend line here. Okay, very similar to BOIL. We'd look for a breakout retest and potentially go back up to $8.21. This blue box right here is a gap. There's a nice gap up here to fill on UNG, which is going to put that right about $8.09. So we'll see how things are going to develop there when it comes to UNG, when it comes to BOIL, when it comes to natural gas. Let me know you guys' thoughts down below. Don't forget, I just made a newsletter. Okay, so sign up for my free newsletter. It's completely free. And I'm giving out free trade ideas every single week in that newsletter. So if you're interested in free trade ideas that you guys could potentially take advantage of, and go ahead and sign up for that newsletter. Don't forget, you can always email me as well directly, ZachlyTrades@gmail.com. If you guys are interested in doing a one-on-one personal coaching session, I do those every single week, and I'd be happy to work on scheduling a time together with you all. Appreciate you watching this video and make it this far. If you did, smash that like button, subscribe to the channel, and share it with someone you know.